We addressed this a little bit ago. In the 1980s, interest rates were like double digits. If you had a mortgage,
1981, your overnight rates were like 18%, something insane.
like if you had a mortgage rate, it could have been 15% for
Absolutely.
your mortgage. Now we're less than 3.
Yep.
Okay. So obviously super low interest rates these days. What are the pros and cons of this interest rate, situation overall?
So the problem with interest rates being held at artificially low levels, because let's understand that's what the Fed is doing, it is repressing interest rates. Mm-hmm. The problem with that is that now your average home loan, according to the Mortgage Bankers Association's, about $430,000. It's an all-time high.
Average home loan is $430,000?
Average purchase application.
Wow.
So home prices are at all-time highs because, again, consumers are approaching homes like they approach cars. All they're looking at is the payment. And the lower your interest rate is, the lower the payment's going to be, the more home you can buy. Mm-hmm. If interest rates ever rise, you're not going anywhere. If interest rates rise, you might lose your home. You might get foreclosed on.
If they have an adjustable mortgage, or how does it work with fixed rates?
Well, a fixed rate mortgage should be tenable, but if home prices fall because interest rates rise, bear in mind, okay, so here's something easy. Purchase applications on Thanksgiving 2020, not very long ago, were up 28% year over year. I mean, housing was roaring.
On fire.
Fast forward to the latest week. Purchase applications to buy a home were up 1% and on the brink of going negative year over year because we've had a little move up over 3% in the 30-year fixed. Mm-hmm. If you buy with an FHA loan, 3% down, you borrow from your parents, you stretch, and home prices start to fall. And home prices falling are possibly accompanied by a slowing economy. So if you lose your job, or if your wife loses her job, if one of you loses, and all of a sudden you've got this mortgage you stretched to get into and you need to get out of the house. Mortgage rates are higher. You're upside down on the house. You owe more on it than it's worth. It's very 2008, 2009. And yet here we are.
Scary thought if you're buying too much house.
If you're buying too much house.
Okay. What about the stock market? What's your advice? That's sort of home, but
I'm on the sidelines right now.
Really?
I'm not in the stock market right now.
You personally are not?
I personally am not in the stock market. Now, I seed companies, which is even riskier. Private equity is much riskier than public equity. Mm-hmm. Let's be.
Yeah.
So I am taking on risks, but I can't wrap my head around valuations and why stocks are where they are. So I'm on the sidelines.
So I'm just going to read between the lines here. Being that you're on the sidelines, does that mean you're expecting the bubble to burst pretty soon?
Well, we're starting to see, volatility. The stock market rose back to all-time highs post-pandemic.
Right.
We know that.
It's all-time highs right now. It's had a rough week or two.
But in 2017, people follow the VIX index pretty closely, don't they? Volatility index.
Yeah.
The volatility, how much stocks can be expected to move going out into the future. In 2017, the VIX was in a single-digit territory 52 record times at the close. The prior year before, there was like 1996, 1993, it had been like 4.
Okay.
So there was immense complacency in the market. People did not anticipate that stocks were going to do anything because the VIX was so quiet. The VIX post-COVID has been north of 20 for a record stretch. So there is anxiety being exhibited in the market that there's downside risk. And so that's what you follow. You follow how much movement is anticipated looking out.
So assuming this 1.9 trillion stimulus package
passes, it could go right into the stock market.
Okay, so isn't that an indicator that the stock market would go higher?
Sure. And your volatility will probably go higher as well.
But that's still...
Remember, you've got tech stocks. You've got tech stocks that are down for 6 months, more than the broad average right now. It's very quiet because there's still all this euphoria out there. But people are starting to lose money.
So what's your advice to the average investor out there? I guess let me give you 2 scenarios. I haven't even started in the stock market. Danielle, I don't know what you're talking about. I'm 30 years old.
Save your money.
Just save.
Save your money right now.
And what about someone who's, 50, 60, they're not retired yet, but they're kind of getting their direction?
If they're
in it though. They've got $500,000 in the market, whatever.
So you need to pare back that exposure if you're thinking about living on a fixed income.
What do you mean pare back exposure? Go more to bonds?
Sure.
So
buy gold, whatever.
Gold. Bitcoin?
I'm not going there.
Silver?
Silver.
Kiyosaki loves silver.
The beauty of silver is it's precious and it's industrial.
Oh yeah,
It's got multiple uses.
I almost got a tattoo with silver. I don't have any tattoos. Based on Kiyosaki, I'm all in on silver now.
The precious metals complex has really been beaten up because people believe that Bitcoin's the currency of the future. But I think that Xi Jinping would have something to say about that. I don't think that I don't think China plans on Bitcoin taking over as the reserve currency status. I think China plans on that being their currency and not giving up control to something electronic, which is why China's rolling out its own digital currency right now.
Wow.
So
we'll circle back to Bitcoin. I know that we don't want to have an hour-long Bitcoin. Next, down the middle question with Danielle DiMartino Booth, host of Down the Middle on Valuetainment. See how that works out. So the topic.
By the way, I should jump in here for just a second. Down the middle is because people who follow me on social media can't figure out where I stand because I try and keep it in the middle. And I think that the middle is what's been lost in this country.
I
speak for that moderate. Anyways.
I'm with you. Let me dap you up to that one.
Boom.
Thank you for watching this short clip. If you want to see the full episode, check it out right here. And if you have not subscribed to Valuetainment, click right here.
All we talk is money. All we talk is money. All we talk is money. All we talk is money.